Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. Today is August the 23rd, 2023. It is now 3:20 p.m. Central Time. Just about done with trading for both mortgage-backed securities and bonds for the day, and we are having a good day today, guys. We're actually having a good day today. So why is it that we have, 14 days of bad days, and then all of a sudden we're having a good day? What's changed? Well, what have I been talking about for the past few weeks? Been talking about the fact that while we see inflation going down on the PCE and the CPI, as well as the PPI readings that are followed usually, the Fed is really pointing at employment. They're saying that employment is too strong for the economy to be in a position that inflation is going to come down really convincingly. Well, what they're saying is they want to see more firings and less hirings. They want to see that the effects of increasing the federal funds rate has constricted the economy and slowed the economy. When the economy slows, people get laid off and people don't get hired. That's what they want to see, the effect of it going through and filtering down to the employment and hiring numbers. Well, we haven't been seeing that. Now, again, we talked about whether there's some questions as to the validity of the way that the BLS is reporting numbers at this point. But either way, we got reports here today that were revisions to the BLS reports from the past. So for the past couple of months, they made some revisions and they greatly changed these reports showing employment not as strong as it came out in the headline and initial readings. Now, you may not know this, but when a Bureau of Labor Statistics employment reading comes out, let's say for the month of, August 2023, there will be multiple revisions that come out through the next year to the August reading of employment as they gain more and more data. Now, when revisions are made to more recent reports, that is more impactful when revisions are made to reports that are a year old, right? Well, we're getting revisions to some more recent reports that are saying that the employment numbers aren't as strong as they were reported, and the bond market is loving that. Take a look at where we are right now, up 52 basis points on the day. Man, we haven't seen a green number like that for a while. The 10-year treasury running away from that 4.33 that we were concerned with, down 13 basis points. Take a look at our chart here. Just a really nice candle here, running up here, bouncing back a little bit, settling where we are right now, up 52. Again, we still have a half an hour left in the trading day, so we'll see how things balance out. But sure is good to see this Fibonacci level here acting as a strong floor of support under us as we bounce off of it and now start to see that leash effect that will hopefully pull us back into the range of our moving averages, which is where we want to be. Let's take a quick look at the 10-year, and then we'll go see how home loan interest rates are responding to these numbers. Again, we are seeing this ceiling of resistance at 4.335. We banged up against it, closed right about where it was at, and then now today seeing a drift back down, hopefully moving back into our moving averages where we want to be, a clear leash effect here. So let's take a look and see where we are on our chart, on our interest rates. So again, 50 basis points improvement in the mortgage-backed security today. Yesterday, I believe we closed at 7.625 with a little bit of a credit. Let's take a look and see where we are on the Brent Bruce Daily, the very well qualified 30-year fixed conventional home loan with 25% down and 800 FICO scores. What do you know? We are 7.5% with a credit of $839. So we've improved in interest rate and we've improved in credit here with the loan store leading the pack. If we go down here a little bit further, 11 mortgage, 7.49 with a credit of $688. United Wholesale back in the game here, 7.5% with a credit of $680. Let's open up United Wholesale and see what happens if we pay a point today. We pay a point. What do you know? Guys, yesterday, if you paid a point, you were maybe getting to 7.25. Today, if you pay a point, you're getting to 6.99, a little bit less than a point. All right. So I want you to think about the fact that when you look at these numbers, people often say, how much does it cost to reduce the interest rate? Is it 1/2 of a point? Is it 1 point? How does that equate? It doesn't equate. Okay. So it changes every day. You can see that we had a 52 basis point run today. And the drop in the interest rate for a no point loan was 1/8%. But the drop in the interest rate for a loan with one discount point was 1/4%. You see, so it makes it the 1/4% buy down today is more effective than it was before. So the variance of paying discount points in comparison to what that does to the interest rate, there is not something that you can say, hey, if you pay 1 point, you get a 0.5% off of your interest rate. That's not how it works. You have to look at these numbers, not just each day, but each bank to see what makes the most sense. That's why you use what? A mortgage broker that has access to multiple banks and can go in there and see the best program for you. Let's open it up. Looking at the parameters here. There you go. For compliance purposes, that is what we are looking at here. So a good day today. We're going to hope to see if we roll in and have a good day tomorrow. The big news that's going to be finishing out the day is we're going to get the earnings from NVIDIA, which apparently is like what everyone is watching right now. And then remember, we're going to hear from the Federal Reserve at the end of the week on Friday as they finish up their meetings in Jackson Hole, Wyoming, which unfortunately I'm feeling that we may not get positive news from them, at least the way that the bond market looks at things. Make sure that you like, subscribe, share, hit the notification bell in the bottom corner here. Let me know what you think. I'll get back to you again tomorrow.